So what happens when a stock just takes off like a rocket ship? Today, we're going to dig into Sutro Biopharma, ticker STIO, and its stock has been on an absolutely wild ride. Seriously, it's a story of explosive growth, huge trading volume, and some signals that are, well, completely at odds with each other. So what is actually going on here?
First, just let this number sink in for a second. 387%. That's the gain STI stock posted in just 3 months. That is the kind of move that makes everybody pay attention, you know? But like we all know, rockets have a tendency to burn out.
And the speed of this thing is just staggering. I mean, look at this timeline. You go back to mid-July, and the stock is just quietly sitting there at $4 and change. Then boom, early September hits, you see this massive spike in volume, which tells you people are getting interested. By mid-October, it hits a peak of almost $28. That is one heck of a climb.
And that brings us to the big question, right? When you see a chart that looks like this, what are you really looking at? Is this a golden opportunity, the start of something huge? Or is it a speculative bubble that's been stretched to its absolute limit and is just waiting to pop? To figure that out, we got to look at the evidence.
Okay, so first, let's put on our detective hats and look at the case for this climb. Why did the stock go up so much, so fast? What are the technical signals telling us that this trend is the real deal? Let's follow the positive clues.
All right, before we dive in, a real quick primer on a key tool, the moving average. The easiest way to think about it is like a smoothed out line of a stock's price history. Traders look at where the current price is compared to its average over, say, the last 5 days or 20 days or even 200 days to get a feel for which way the trend is heading and how strong it is.
And here's what's so wild about STI. The price isn't just a little bit above its moving averages, it's soaring, way, way above all of them. This tells us two really important things. One, in the short term, the bullish momentum is just incredibly powerful. And two, in the long term, this isn't just some random blip. It's a confirmed, strong uptrend. And the good news for the bulls doesn't stop there. Other key indicators are all flashing green. For instance, the MACD, which measures momentum, is strongly positive. The ADX, a tool for measuring how strong a trend is, basically confirms this move is powerful. And the OBV indicator, which looks at buying and selling pressure, suggests that big money has been steadily buying this stock. So far, it looks like an open and shut case, right?
But this is where the story takes a sharp turn. Just when you think everything is perfectly bullish, we start to see some really bright red lights flashing on the dashboard. It turns out the incredible strength of this rally might actually be its greatest weakness. So you have to ask yourself, can a stock that's gone up almost 400% in a few months just keep on going, or has it gone way too far, way too fast? This is the question that brings us to the other side of the story, the really serious risks. Now, to get the risk here, you need to understand this term, overbought. Think about stretching a rubber band. You can stretch it pretty far, right? But the farther you pull it, the more tension builds up. And eventually, it's going to snap back, and it's going to snap back hard. An overbought stock is exactly like that. It's been stretched so far to the upside that a sharp pullback is looking more and more likely. And wow, just look at this. This isn't just one indicator waving a little red flag. It's a whole chorus of them, all screaming the same thing. The Relative Strength Index, the RSI, is at 93.8. That's almost unheard of. The Money Flow Index is at a near-perfect 99.7. The price has completely blown past its upper Bollinger Band, which is supposed to act like a ceiling. Pretty much every tool designed to spot this exact condition is blinking bright red.
And here's another way to see just how stretched this thing has become. There's a statistical model called linear regression that predicts where a stock's price should be based on its past trend. Well, according to that model, the value should be around $6, but it's actually trading over 21. That's a huge disconnect. It's another sign that the price has gotten way, way ahead of itself.
So what we have here is a classic standoff. On one side, you've got this incredibly powerful uptrend. On the other side, you've got these massively overbought conditions. The stock is literally at a crossroads, and according to the analysis, there are 3 very different paths it could take from here.
So let's walk through them. First, the bullish scenario. The fear of missing out, FOMO, just takes over. The momentum keeps going and pushes the price even higher, maybe to test that $25 psychological level. Then there's the neutral case. The stock just takes a breather. It chops around sideways for a while as everyone tries to figure out what to do next. And then you have the bear scenario, where that stretched rubber band finally snaps, triggering a sharp, painful drop all the way back down toward that $5 or $6 level.
Okay, we've seen the rocket fuel and we've seen the flashing warning lights.
So after looking at all this conflicting evidence, what's the final verdict from the analysis? Where do we land?
It really all boils down to this one core conflict. You have an unstoppable force, that's the uptrend, meeting an immovable object, those overbought indicators. This is the absolute definition of a high-risk, high-reward situation. The chance for more gains is absolutely there, but the potential for a really painful drop is just as real.
And that leads to this really powerful and direct piece of advice from the analysis. This is not a place for the faint of heart. The message couldn't be clearer. If you're even thinking about trading this stock, you have to be incredibly careful. The volatility is off the charts, and without super strict risk management, you could get hurt and hurt badly.
Which leaves us with one last big question to think about. When you're dealing with this level of crazy volatility, with signals pointing in completely opposite directions, where do you draw the line? At what point does a high-risk trade stop being a calculated investment and just become a pure gamble? It's something to think about.